Would depend on a lot of factors, what the rate is currently, how much the penalty is to break, what would we be getting them into, what do they need the money for. It's not just a one answer to give it. It's would be tailored towards all of those factors.
So something I would look at before going to refinance is finding out how much your penalty would be. We can do that for you as well, but that's sometimes something that comes up that a lot of people weren't expecting.
Right now, it's a rate environment where there's a lot of stress and a lot of uncertainty. However, that doesn't mean that, there's still opportunities for borrowers that are looking to refinance their property. So I think if you're considering refinancing, make sure you talk to a broker, make sure you know what those numbers look like, make sure you know what your new payment's going to be, and make sure you understand why you're refinancing. Are you consolidating debt? Are you extending your term and improving cash flow?
Don't just take the first rate that someone's giving you. Part of what we do at Mortgage Suite here is we do the shopping for you. It alleviates a lot of the excess pressure on you to have to go around and do all these credit checks and everything like that. We do all the legwork, we do all the shopping around, and we put you on the right mortgage that we see fit.
I always tell people compare the interest rates, their current terms, whatever they have it into right now, and always plan beforehand like how long they want to stay into this property. If they're selling, no need. If they're not, then always make sure refinances cover all the cost and give them some extra money.
Just because you can lower your payment doesn't mean that you should. It's tempting to stretch the amortization back out to 25 and 30 years, but that's really just kicking the can down the road. And if you are able to make and service some higher payments to pay the loan down quicker, I tend to recommend that you do so, because the best way to insulate yourself from interest rate shocks or any of the nonsense going on in the economy is to owe less money.
Almost 99% of the time, it makes sense to do it. If it's very tight at the end of the month and we can make it work and people can have more breathing room, even if that does extend their amortization by 5 years or set them a step back in their mind, sometimes everybody just needs a reset.